Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week, welcome to Monday. First of all, today, I wanted to start by giving Kemozabi a shout out, okay, because he put out this 25-minute video, and I'm going to link it at the end of this one. So if you stay all the way to the end, in the last 15 seconds of this video, if I do it correctly, there should be a big window like that in the middle of the screen, and you can just click on that, and it will take you to this video. Highly, highly, highly recommended it. This is really, really well put together. He showed a whole heap of things like matching legs. That blew my mind. We have already hit some of the fib targets for the stock market. This channel as well potentially has some ominous implications. And he covered a whole heap of other stuff, including some other indexes. The Nifty 50, for example, may well be looking to have put in a top already. Maybe looking to break market structure. He also covered things like gold. He did a big deep dive on the bond market. So highly, highly, highly recommended to check this out. Like I said, I will link this thing at the end of the video. It should be a big window like that for you to click on. For the rest of this video is going to have three components, okay? Number one, we're going to continue to hunt these cycle lows. We've been talking about this November 5th time frame for some time now, right? I was saying all the way back in, late October, by the time we get to the 5th of November, people are going to come out and be super bearish into that time frame. They're going to start calling for much lower numbers, new lows, 40K, 49K, whatever it is. And then they're going to use the election as a narrative to explain away the bullish price action out of the cycle lows. And an update on this is we are, of course, getting closer, okay? The 5th of November timeframe is officially here. And, of course, we are already seeing and have been seeing, I told you it was a fake breakout, okay? Classic upthrust in Wyckoff distribution, or K-Horse is going to win, and then the markets are going to tank. But it's just a cycle low, and in theory, okay, as you're going to see, hopefully, things should be getting pretty bullish for Bitcoin. So that's the first component. We're going to be hunting these cycle lows, continuing to do that. The next portion of this is going to be just taking a look at some very, very bullish looking Bitcoin charts that I can't get away from. We're going to quickly and briefly touch on the bear case, which is a low probability according to both me and Bob Lucas, but needs to be touched on. And then I've got a few things to point out for the stock market because I continue to be long, strong and bearish. Okay, there's just nothing I can do about it. And I think it's okay. I would rather be bearish and wrong, but still be long. Right, that's absolutely fine for me. I'm happy to sit here and be bearish and remain long if I'm going to keep making money in longs, right? But the higher up we go, the more I'm looking around here, based on what Kemo was showing in his video as well. I really don't think this market is going to run past this year. So I've been plenty wrong before, and I will be wrong in the future for sure, okay? And as always, when I'm wrong, I'll just hold my hands up and say I'm wrong. But one thing I am pretty good at is staying on the right side of the trade, even when I'm wrong. So again, long, strong and bearish, very weird posture. I've never really been this doom and gloom about the stock market, not in recent times. Even during the C19 plunge, I was rubbing my hands together like, man, this is going to be easy. Just have to go flat for a while, buy some breakouts. But this time around, like my persona is very different, right? Even my wife is starting to say, you look stressed, Camel, like you look stressed. And it's because I really think we are dangerously close now. So I'm not trying to doom post, okay? As you're about to see, we're going to talk a whole heap of bullishness in the short to medium term. But I really, again, I'm getting increasingly concerned about this stock market. So subscribe if you want to see me get some longs out of this cycle low. I'm going to hunt this low down like we do every time they come around. I'm going to get some positions on and we're going to capture whatever the cycle has to give thereafter. I think some things worth paying attention to or worth taking note of here is that in every previous cycle, Bitcoin has made a low price in the week of the US election that has never ever been revisited again. So this week may literally be the last time you can ever buy below 70k. And it's not one of those calls that's like never below 70k again, okay, which of course they're always wrong, right? I'm not trying to say that's not what's at play here. But just objectively speaking, if this cycle is going to repeat, if nothing is that different this time around, then once we find this cycle low, that should be the final low of this cycle. And in theory, we should never ever come back to retest it. At least if the election is going to play out like the prior ones did for Bitcoin. Something else worth noting is post-US presidential election, the average return on Bitcoin is 23% 1 month out, 105% 3 months out, and 470% 6 months out. That's the average. The hilarious thing about this is after looking at Plan B and seeing the kind of expectation he has, which is essentially to gain about 100k in dollar value per month for Bitcoin, okay, this would actually just be normal. If we get anywhere close to these numbers, okay, then happy days, right? Happy days. And when we just compare this current black chart, which is this cycle, to the rest of them, there appears to be an awful lot of space to go. And I always say this, right? Bitcoin does Bitcoin things. And what I mean by that is it has this way of convincing people it can never do anything like that, and then doing it in a few weeks, a couple of months, and leaving everyone sat there going, well, we could have never have seen that coming. When in fact, That's exactly what it does every single time. So if it does do something like that, will it really be out of character for Bitcoin? No, it won't. Meanwhile, Saylor is out here again. He's going to raise 42 billion in capital. Okay, so this is just mental now. We're getting absolutely crazy. But, you know, if he's right, then he becomes the hero. Have a look at this setup here from TechDev, okay? We actually haven't seen this current setup for 8 years. This is the Fisher transform down the bottom. It did not fire the last cycle. And that was the cycle that we got very muted bull run. Remember, back here, everyone was looking for 200, 300K, and we didn't get it. But interestingly enough, we also didn't get the Fisher transform confirm. But this time, it has confirmed, telling us to keep an open mind about outsized gains walking forward. And again, against a backdrop of a bunch of people saying, no way, Camel, no way it's going above the 5.3 rule. Also, since the ETF launch, Bitcoin has been closely tracking global M2, albeit with a 10-week lag. But this tells us to expect some upside into the end of the year. Meanwhile, Bitcoin's structure seems eerily similar to the Nikkei 225, which, as you can see, put in all of these 4 legs and then that yellow fifth to a massive, massive, massive blow off top. And for Bitcoin, it has all of the prior 4 completed. And now what we're potentially in the middle of, or at the start of, I should say, is this final blow off top fifth to insane numbers. I don't know if you can see that because it's blurry, but that's like $3.5 million. Now, that doesn't necessarily mean I'm calling for this thing to go straight to $3.5 million. Also, note, this would be about the end of the decade, 2030. So somewhere in here, we would probably get a shakeout, a big violent bear market of 80-odd%. That would take us down into that 2026 cycle low that I've been talking about as the final chance to buy Bitcoin before the true outright return to QE, Fed balance sheet expansion, and Bitcoin to do that 50 to 100x move. And if these numbers sound crazy to you, well, just take a look at this, okay? Because the Bitcoin price, which is in the blue, has been very, very closely tracking the model price, which is in the red. Okay, you can see there's kind of these upper and lower limits in grey, okay, above and below the model prices. The window here, if this thing continues to track, relatively speaking, quite close, okay, gives us a peak in October of 275K, with the lower and upper bands being 160 to 490K. And I don't really think anyone is thinking 490K is possible, but notice how prior tops hit the upper grey zone, okay? And so if we were to do something akin to this, okay, the price may well be a lot higher than a lot of people are ready for. But as always, it's good to point out there's a bearish downside scenario here, okay? Bob Lucas, just for the record, he wrote a whole heap on this. I'm not going to read it all, but he puts around a 10 to 15% probability that this is at play. But we do have to be open to it, because if it starts to unfold, you don't want to work it out here, do you? Okay, you want to know in this kind of neighborhood, so you can say, okay, we got in at the lows, we traded it on the way up, we got out here, got back in, and we'll take some profit here and at least be able to still walk away with decent gains. Okay, that'd still be multiple hundreds of percent that can be allocated back at the 4-year cycle low before that 50 to 100x move comes in. Bob Lucas is saying the 10-month moving average, which is this line right here, okay, we shouldn't really trade below that on a monthly basis. And if we did, he said he would start to be concerned. That level in dollars, by the way, is 58,800. So notice how a whole heap of people are out there calling for 49K, for 40K, for much lower numbers. But the reality is, from a 4-year cycle perspective, any close below $58,800 would be Bob saying, okay, I think something's wrong, time to start locking down some of the gains, time to start looking for this bear scenario to play out. Now, the positive of this is so long as we don't trade below 58.8, okay, find a cycle low this week as expected to out of the elections and then start to rally, then it should absolutely be party time. As I said earlier, that level, okay, should also probably never be breached again. And there's a whole heap of space overhead. So it's by no means a bear post or a doom post. 10 to 15% probability is what Bob gives this scenario, but we do have to be open to it so that you don't get blindsided by it. Like I said, if this thing is to play out, and neither one of us think it's going to, but if it does, you don't want to figure it out here, okay, and then not be able to actually extract money from the market and reallocate it at the lows. But as I said at the start, okay, we've done the cycle lows. We know they're coming, okay, and as always, we're going to find those in real time. I've also shown you a whole heap of really bullish and encouraging looking Bitcoin stuff. Again, hopefully, okay, we just stay positive, we stay long and strong until the market gives us reason not to, no matter how doom and gloom and bearish I might feel on the inside. But this is the kind of thing right here that I really can't get away from, okay? As I was showing over the weekend, the deterioration in the labour market is very, very real. Notice all of the total revisions that we have seen to the labour market since January 2023, totaling almost 500,000 downward revisions. So even though the labour market is deteriorating, under the hood, It's even worse. Of course, we saw the non-farm payrolls as well. Take a look at this, okay? In 2000, what happened? We crossed below that zero line. We went negative in non-farm payroll. And notice how the market in blue here had one final high left in it. Before then, it was good night, Irene. The same thing was observed in 2007. This flips negative for the first time, the stock market has a final few weeks of push, and then that's all she wrote. If this thing is to repeat, having now seen non-farm payrolls go negative, that tells us out of this cycle low, there might be one final high left in this before something like this unfolds. So once again, I say it's pretty important here, in my opinion, to be open to downside, okay? Long, strong, and bearish seems to be my preferred posture. And notice how the heavy truck index in blue, okay, turning down. Synonymous with tops in the market, turning down, synonymous with tops in the market, same here. Now we've got this thing turning down with divergence in the stock market. It tells us again to keep an open mind about probably seeing tops in the not too distant future for these markets. And as Big Mike shows here, okay, the 10-year 3-month inversion is moving rather quickly now. Remember, okay, we invert. A whole heap of people get it wrong by calling for a recession or saying that's it, 12 months later we'll be in recession, 18 months later, whatever. But the real signal is reversion back above the zero line, and here's the key, acceleration. But if I grab this magnifying glass that I don't use nearly enough, okay, does that not look like acceleration to you? Okay, I think alarm bells should be ringing here, particularly if this thing continues to move higher at an accelerated rate. And again, look at the US unemployment rate, okay, getting ready to explode just like prior times. MACD getting ready to cross bullish, as is the RSI, getting ready to start to really accelerate and show that upside momentum for unemployment. So absolutely wild times, okay, long, strong and bearish, okay, we'll stay long all the while we hold these cycle lows, all the while we continue to push up, okay, and then we're going to look for third and final angles to be confirmed by failed cycles and use that as our exit, as I was saying over the weekend. Clearly there's no changes to any of these, okay, we're just going to keep pushing these longs, and we should be getting some bounces this week out of the elections, as we know. We should also, as I've been saying over and over again, be looking for the yellow squiggle to play out, find a cycle low this week for Bitcoin, okay, and then again we'll be catching this in real time, so make sure you subscribe and follow along to see that. Other than that, welcome to the week, welcome to Monday. I'm going to link this video here for you guys now from Kemo's RB, so please go and watch that. Other than that, I'll be back tomorrow. Have a fantastic week, and until next time, I'm your boy Camel. Cheers, bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us normies